Hey, good morning, guys. Ken at Tortoise Capital. It is Creativity 202 check-in for Sunday, July 9th, 2023. Wishing my brother safe travels on his way from Detroit through Chicago down here to get a truckload of goodies to take home. War games, books, and drums to find homes for all the stuff I am downsizing in the office. Hard to let go. But at age 65, if you haven't learned to let go yet, when were you going to wait and learn? I guess so. I don't know. I wish I'd learned that sooner in life. So let's go. Let's go around the horn and do a quick check-in, and then we'll jump into Creativity 202 work in progress. Jeff, how are you doing out there?
I'm great. I changed my background for you. That's what the pretty part of the landscape looks like here. And strangely enough, you were talking about gold and gold mines this morning. So as soon as this is over, my son and I are going up to Kimberly, Utah.
Yeah.
Which was a gold mine established in 1890, and they abandoned it in 1910, and they tried to revitalize it in the 30s, but it's been completely a ghost town since 1938. And the interesting thing is it's inaccessible most of the year due to the snow. So you can only really go up there in the summer. So we're going to go check that out. And yeah, it's all good here.
You know, one of our favorite things to do as a family was watching on the Discovery Channel the gold rush and watching the boys and the different ways in which people are approaching gold mining as a way to think about business and trading and psychology and teamwork. Fascinating stuff. Cherish that time with the kids. We still laugh about that. Alrighty, how are we doing today, sir?
Doing good. Everything's good here in St. Louis, and beautiful weather, and good to be with everybody.
Awesome. Greg, how you doing?
Doing well. Things are hot here in Texas, and just putting everything together. So I think we're doing well.
Cool. Jen, how are you doing, sir?
Yeah, doing well. Nice sunny weather. Yeah, just had a kind of relaxing earlier today, so all good.
Awesome. Chun Long, how are you doing, sir?
Yeah, very well. Very nice weather, very nice morning right now. But I have to acknowledge I'm a little bit tired after the last hour Q&A session from Foundation. Very nice.
Yeah.
Oh,
Yeah, there was a lot in that last one to decompress. So, a lot to unpack. And Marlon, how are we doing, sir?
I'm doing very good, very good. I'm just still processing something from the previous session, but your two things about gold nugget was profound, man. It was something I didn't realize that it takes 10 cubic feet of dirt for 1 ounce of gold. So
yeah. It's either feet, it may be yards. I have to.
Yeah. No, you said yards. You're right.
At some point, it doesn't matter if it's yards or feet. When you say cubic, you know that you've got an industrial process going on, and it's just there's a cost of processing it, and it has to cover the cost.
I mean, yeah, that and the discussion on the compounding growth on the personal learning. I mean, and then you invited us. Thanks for the invite. I mean, I couldn't resist the temptation that hey, I need to sit for another hour for sure.
Yeah, I think if I said feet, I think it's 10 cubic yards an ounce.
Yeah.
For process, if I remember my gold rush numbers correctly. Anyway, and good morning, Hamad. How are we doing, sir?
I'm doing great. That lesson you just gave us was worth. That was wow.
Put a big number on that. If you
that
put
thing
like
was worth, it was like a 10 cubic yard of the gold.
Yeah. So what I want you to do is I want you usually I'm not going to put a number in your head, but put a really big number out there because then I can extract that and use that for mark. I'm just kidding. If I was I guess some people would tell me to do that, but yeah, I think it was pretty good. I've seen worse. So what we're going to do is I'm going to hit the tones and move us into the creativity check-in, and appreciate the courtesy of the guys in the course to allow us to watch them at work, and we're grateful to you for that. So here we go, into the circle. Jeff.
I'll get us kicked off here. So the lesson predictor, just like all of them, was just fantastic. My first reaction was, I don't predict and I can't predict. And then I caught myself constantly predicting. Like, that's actually literally how you fly an airplane, is you make a control input adjustment and you make a prediction about how its effect is gonna, what effect it's gonna have, and then you observe the actual effect, and then you make another change. So that's, that's literally predicting short term and constantly being aware and correcting is what I've been doing my whole life. So that was pretty cool. I like the whole idea of the conflict situation, because it kind of it raises the bar and brings everything, it puts more weight on it, right? So when things are rapidly escalating, you don't have a pause button. There's no time to think and speculate. And that's true in life, and it's certainly true in trading. So Ken's idea of pre-planning all these action points is huge, because you respond before you even think about what you should do. You look down and your stop's been moved, and you didn't really think about that. It just happened because you've been practicing it a lot. But I'm going to take this lesson with me into this next week, that we prepare by learning to anticipate quicker, and the idea of forgetting faster, so that we're not wasting brain power holding on to the thought and emotion of, oh, that last one was wrong. We're just letting go of it. We just recognize that didn't work, do something else. And again, that ties back into flying an airplane. If I put in a control input and I don't get the expected result, I don't judge that moment, because it's already gone. I just do something else. And if that doesn't work, I do something else. And if that doesn't work, I do something else. And that's just how we work in my job. So the idea of forgetting faster, and I practice that really well in the cockpit, not so well in life. But the idea of forgetting faster so that we can either stay right in the moment, or even slightly forward, anticipating what's going to happen. I think that's a really big idea. So don't try to be right, just constantly anticipate and assess and correct and anticipate, just in a loop. That the lesson says that's how your brain becomes more fluid. Shorten your reaction time by being adaptive to what's actually unfolding in the moment. Set aside your ego, which always wants to be right, so that you can anticipate more rapidly, and focus on the near term, because I think humans have accept the feedback and then discard the stuff that doesn't work. I think we're pretty good in the near term. Nobody that I know can predict very far into the future. So exercise 1, I really didn't intend to do it, but I'd read the lesson a couple times this week, and we have an office system here, where I have a cubicle, but there's a lot of other cubicles. So I've been working on all of my trading stuff and the creativity stuff with my headphones on, not to bother anybody. But I had 2 guys sitting behind me, and I can predict those guys greater than 90% for the week. So the prediction was, are they going to complain, today? Absolutely, 100%. Are they going to, how many times is each of them going to complain in the last hour of the day? Yeah, I mean, it was pretty predictable. Couldn't get the number count just right. That was kind of random, but the fact that it was going to happen was predictable. The trader video, I've been kind of living that and watching that for a version of that for several years now. And the importance is crazy high, because the exits are the hardest part of the whole thing for me. I have probably my biggest problem is I don't have any hesitation entering a trade ever. Like, that's my weakness also. I have to be on guard, because last week on Monday evening, I had 7 open trades, which is twice as many as I really should have had. So the exits are the hard part. And when I was preparing for this lesson, I heard Sanal say something, many things, but one thing that sparked that kind of has to do with predicting and letting go is a twist on a meme that I've seen in the last year or two. But this thought came into my head, and it was so good I had to write it down. And the phrase was, I wonder if my last trade is still thinking about me. You know, I'm thinking about it. It's probably not thinking about me. And then the trader video, in my view, there's no one perfect exit. I've got about 6 exits, and it depends on where I'm at in the life cycle of the trade. And I kind of break that down to the entry, which is from when I enter, the 1 hour stop gets put in, then the trailing stop gets activated. And if I get to no lose plus dinner for 2, that starts phase 2. And then from no lose plus 2 to an above average win is phase 2. I have different objectives and goals in that region of the trade. And then any exceptional win is a different management project than the first 2. So that's kind of how I think about that. Still a work in progress for me. One big aha moment that I had, and I'll share some things with you in a minute, is I've always tended to want to go for the greater move. So in the past, I've left my stop at 1 hour because, and I rationalize that by saying that's the trade. That's how we framed it. We enter here. This is when we know we're wrong. Leave your stop there and let the move play out, because we want these, you know, 5, 6, 10 hour winners. They just feel so great. And you think, this is where all my money comes from. Is I just kind of, in my mind, I was just treading water until I could get to the next big win. And not big win, but as a swing trader, that's kind of what my mindset was, because I've never been a scalper, and I've never really been a long-term buy and hold guy. Since my youth, when I experienced so much pain, I figured out that those 2 years of declining markets were just misery to sit through. So, but the aha moment was that if you take nothing but 1 hour losses, and you could possibly average a 4 hour win, which you can't, it would be the same as taking a half hour loss and getting an average of a 2 hour win. The ratio is exactly the same. That was a huge aha moment for me. And it illustrates the importance of getting that stop up as soon as you have the opportunity. Because you can take 2 half hour losses, right? And it's the same as one hour loss. So the theory of exits, I'm still working on it. I have 6 different exits that I can employ, and I track them all. So I'm tracking all the entries and all the exits. Which one's best? Right now, all I can say is it depends. So the theory of exits for me is easy. I understand each one of them. I know what they do for me. I know theoretically when I will employ them, but the practice of doing that every time is a little more difficult. So I've got a document I'll share, Ken, if you don't mind. This is my work in progress. Can you guys see that? Let me get it to where I can see it. I'm on a small laptop here. Let's see. There we go. Can you guys all see the screen? So this was the last week of June, and this is what I spoke about last Sunday. And this was abnormal behavior for me, abnormal enough that I knew that once I got to Friday, that I wasn't going to do that again. And I did a lot of work on that this week. The fact that we had a weekend and then a very light trading day on Monday and then a holiday on Tuesday helped give me time to synthesize what I needed to do going forward. But I took 47 trades last week, which is an insane number. Before I started trading intraday 4 months ago, I looked back in 2022 and I had roughly 850 executions. So that's 440 trades, just a little over, and that's on a portfolio of symbols, 10, 15 symbols. I usually had 5 positions open at a time. So that's basically one trade a day. But you can find out all about this if you want to listen to last week's creativity replay. But it was abnormal enough for me that I knew that I couldn't sustain that. I had to make a change. So what I do this week, let me get you guys moved up here. I worked 75 hours this week. We had a few fires to put out. The rest of my time is standby time, so we just cannot leave the base. I have to be ready to go into action anytime, but that creates hours and hours and hours where I get paid to basically work on my trading plan and creativity and so forth. So I'm pretty lucky that way. So during that time and in the mornings and the evenings, the first thing that happened on Sunday is I realized that I lost 11 pages of my handwritten notes, or I'm typing it into a spreadsheet or into a Word document. I lost everything that I had for lesson 19. And my first response, especially after the tough week I had, was, to heck with it, just let it go. But for some reason, my written notes are very important to me, and I take a lot more notes than anybody that I know, but that's just my modality. And then I hear this morning Ken talking about getting rid of his books, and he said they're an extension of his brain. Well, I think that's exactly what my notes are to me. It's just putting down on paper something that's permanent or semi-permanent that I can go back and relearn and reflect on. So they were important enough for me that I did all of that work over again, including watching the previous cohort videos and taking notes on that. And then I rewatched Ken's comments to me last Sunday twice. So my 11 pages of notes turned into 17. And then I also have 23 pages of notes on lesson 20. And a lot of that has to do with the personal work of my assessment and different things. But this was my most productive week. I actually performed more work than I probably have in the last 4 months, but it seemed much easier. And the very first impression when I found out I lost those notes is I don't have time to do that again. But as Ken preaches, I actually had exactly enough time to do all the things that needed to get done this week. Just barely, but I had it. During that redoing the lesson 19, I had one of my biggest aha moments, because I tend to take things too seriously. The things I do in life, and I'll phrase it now, the games I play in life, my chosen profession, running a business, I take it really seriously. And that comes from my upbringing of work ethic and, probably a fear of failure, but I just work really hard and I take things too seriously. And this little trading experiment is very, very important to me, to the point that I was just taking myself and it too seriously. And I was focused last week on getting to 10R because I said I was going to do it. In my mind, I had made that statement. 10R in this account is irrelevant to me, it's not the money. It didn't make any difference. So I had this aha moment when I was listening to Ken talk about free throw shooting and his advice to me, what if trading is just a game I choose to play? Ken says it's just trading. It's just one of the things I do. So I actually was able finally to make that mental switch last week, certainly for this account. I'm just learning, and I'm just trading. It's not anything that needs to be taken too seriously. Doesn't mean that I'm not serious about it. And I have a whole lot of notes on this concept. Is Michael Jordan serious about basketball? Yes. Is it a game? Yes. Has he made a really good business out of playing basketball? Yes. All those things are true, but I can still be serious about it. And it can be fun. It doesn't have to be something that I dread. So that was a huge, maybe the biggest shift in the last 4 months was this mental shift of I can enjoy this process. It doesn't mean I'm not serious about it, and I can look at it as a game and still be serious about it. So I also completed a quarterly review of all the trades I made to date. I put 600 in here. It was actually only $5.99. The 600th trade was on Monday, right before the holiday. I've spent over 20 hours so far doing this. Luke Crockford was kind enough. I sent him all of my trade data, and he's the master. He's the game master of assessment. So he crunched all the numbers, and we had probably an hour Zoom conference where he kind of explained what he saw there. So big thanks to Luke. And then I did a visual review of each chart, as well as my daily journal entries, weekly reviews, coaches' notes, all that stuff. The learning that came out of that was huge. And one of the big things is I need a better system for compiling my data. So that became my most important thing this week, was to take this painful, arduous process and turn it into something better. The next aha moment came out of the data itself, and I kind of knew this, but I didn't know exactly. The big problem came to a head on the last week of June because my wheelbarrow was simply severely overloaded, and I was just tired of trying to push it up the hill. So I figured out that I left 75R on the table just from mistakes alone. I also executed 15 trades this week, which is a much smaller number than 47 from the previous week. That was great. And I've created a new system for collecting my trade data. Big thanks to Griff and Luke for helping me with that and ideas, and Griff actually provided some actual spreadsheets and things as part of the applied systems development course that I took. So now all of my trading data is in one place. I have one spreadsheet. It has the trade log, the stats, the R histogram. It has all my chart markups there, all the journal entries, the coach's notes, trade plan. I'm also tracking trader errors on a daily basis now, and there's more to come. It's usable as is, but it's still a work in progress. But now that I've gone through this quarterly review, I have an idea of what I need at the end of the quarter to efficiently do this. I hate paperwork, so if you want to find an efficient way to do it, just make it my job, because I hate it. So I'll find the best way to do it. And the other aha moment was after all these months have passed, the emotions are all gone now. So when I went back to trade number 1 and I started assessing all the charts coming forward to 600, the assessor part of me sees me deceiving myself, even as a trader and even as a weekly coach. The emotions for me, even at the end of the week, whatever I thought the first time, I still think. But after 4 months, I have a different lens to look at my trading. So that's a big aha moment, that these quarterly reviews and monthly reviews, that's probably where the big value lies, as you get to look at them through a little bit different lens, because there's been a lot of trades that have happened in between, and those seem to be more important than the ones that happened further in the past. And then just time, probably just time going by, you can actually objectively look at your performance. I can much better than I can at the end of the week. So that's going into my weekly review checklist as a question of, how am I deceiving myself during this trade or today or this week? So I think in a couple of weeks, I'll be able to give you guys kind of a comprehensive idea of everything that came out of this quarterly assessment, but I'm just going to hit the highlights today. So this is my trader errors that I documented for 600 trades. And in block, I actually broke it down into 50 trades, but for simplicity, this is broken down into lots of 100. So the first 100 trades, I had no expectations. It was just a big experiment. And the question was, I had been a student of Kent's for probably 6 years as a higher time frame swing trader. And the question was, can I professionally trade the intraday charts, the 3-minute chart? And the answer was yes. But because I had a student learner mindset and no pressure at all, I didn't even plan to share this with anybody because I wasn't part of the creativity course then. But I had 3 trader errors that cost me a half an hour. I had 4 other errors. So these are platform errors, and they were induced by the frequency and the pressure of the moment of having to get the orders entered and move stops and things like that. But you can just see started out green. So I was 93% efficient on the first 100 trades. My mistakes cost me 2.6R. And then the second, well, actually just the whole yellow zone. So from trade 100 to 400, I started the kata challenge. So we had and that created some personal challenges for me, some emotional challenges. So I remember distinctly that one week we were trading the SSC only pattern. And, you know, Griff and Phil recommend you just paper trade these and just trade at least 2 hours at some point in the week so you can see the signals. Well, I was trading them live with the small position size, and I was trading a lot of these signals because my idea was I need to trade a lot to get a lot of repetitions in. And that idea was the birthplace of my over trading because I love to trade. I have found out, you know, I love to put on a trade. So that's kind of the idea of my strengths. Not being afraid to put on a trade is a great thing. And it's also probably my greatest weakness. It's something I need to guard against. But the middle part there was trading the SSC pattern for a week when the market was selling off, and it was just 1 hour loss, 1 hour loss, 1 hour loss. And the collapsing dragon was the pattern to trade. And then just because of timing, the next week we're only trading the collapsing dragon pattern, and the market's rallying, and the SSCs were the trade to take. But the great thing about living through those 300 trades is I got to face all of my demons and figure out how they affect me and how I need to deal with them.
Let me interrupt here just for a quick second.
Sure.
What I want you to add to this is a column that shows the average R cost per error, because I want you to notice that trades 1 to 100, the average R cost is what 0.2. So when you were doing extreme attention to detail and no intervention, very small. When you get out into the red zone there, 30 errors are giving you 22R, so that's 0.6. So it's not just the frequency, it's also the size cost of the error is also a factor. This is what happens when you're actually getting a lot more repetitions. You get comfortable with certain levels of loss, you say, and it's easier to tell yourself, hey, that's just the cost of doing business and I'm still okay here. But the increased pace and the fact that you're giving more to the unconscious to do, all of those lessons, though, the little moments of pain and suffering, and then the stories we tell about that, are going into the unconscious about what is acceptable and what's not acceptable. Whereas in that early phase of trades 1 through 100, any deviation would have felt like, oh, I really shouldn't be doing that at all, and you quickly cut it out. Later, as we become more accustomed, things become acceptable that were not acceptable before. And as you add to that some proficiency and familiarity, it just feels easier to allow for the error and for the error's result to be larger. And there's a compound danger that's in effect there. Now, because you're still in the scout mode, this is okay, because we're not risking the farm, but we're also learning that that pathway towards unconscious competence brings all the lessons with them, not just the ones that we're aware of. And that stuff is all in there latent until we've explored it and seen what's going on. So I just want to point out that the average cost per error is increasing. Even week 1 or section 1 to section 2, I went from 3 at minus 0.5 to 10 at minus 4. So even trades 101 to 200, the average cost of the error went to 0.4. Whereas if it was just the same level as trades 1 to 100, that would have only been 1.5. So the size of the pain was already 3 times as large, just going from set 100 to 200. And then on 201 to 301, it's up to 6, so it's 50% larger. And then it's up to 7, I think. Let's see, no, 6. It's still around 6. But then it's, yeah, so now it's around 0.6 on every one of those. So those are 20 times larger in consequence as they were when you were in pure beginner's mind and totally trusting rules and not intervening. So we've got to, but what you get from that, the price of those errors is now you have some evidence about all the things that you were doing differently and what the consequences are. But you only have that data if you're filling out your trading journal and acknowledging the errors and taking a look at those things. Otherwise, it's just numbers. And your feelings would triumph. So that's the importance of having that integrated trading journal and the ability to do industrial review of your performance. So I wanted to stop to make that point before we got off of this one. Back over to you.
Yeah, thanks, Ken, because I really, up to this point, I've just been, this type of trading is new to me. So I've just been making it up as I go along. When I say that, I'm talking about the trader's journal. I had no idea what that should look like. I didn't know how to do the histogram. I didn't know, I'd never seen another trader's log before. So I had purchased 2 or 3 commercial versions of trading logs, and they're just so, they seem like they didn't fit me, you know. You need to track the time that you took the trade and the time that you exited the trade, and none of that seemed relevant. So I just kind of made that stuff up as I went along. I got some of it right, some of it wrong. But the right thing is that I have all the data. I recorded every single trade, the entry type, exit type. So that's all super valuable. But the interesting thing, I'll just keep on going here. So you can see that I started in the green zone, but that didn't feel like good trading to me at the time because I had nothing to compare it to except my previous years of trading. But I've been trading by myself all these years. I've never had a group of support or anything. So I didn't know what right looked like. I only knew what my trading looked like. And it turns out it's not bad. But as I tried harder and harder to be a trader that I'm not, my error rate just got increased. And then at trade 430, and a lot of this is the kata challenge, which was because of the nature of the course. My conflict came from counter trend trading. So I've always been a trend trader, but just because of the timing of the lessons, I ended up for 2 weeks there trading counter trend and just absolutely having big difficulty with that. The lesson, it was worth every minute of it, but at the time, it created some conflict. And then at trade 430, I moved from my house and my office environment with my trading computer and multiple monitors out here to Utah, and I'm working full-time and trading from a laptop a little bit, and then from my cell phone and my iPad. So that was another big transition point. And my problem is I was trying to work harder, and trading is not a place where you can rush things and just accelerate it and try to get through it quickly. It takes as long as it takes. At least this is what my data tells me. I don't know what other traders' experiences are, but the red zone here was me stuck in the mud with my foot on the gas, just spinning the tires, trying to get something going. And I was focused. The big aha moment of this chart was the left-hand side. I was vaguely aware of the trader errors and I was marking my charts every day, but I was focused totally from the beginning on these platform errors. And if you go back to the very beginning of creativity, that's what disturbed me is, I made a mistake. I meant to buy and I hit the sell button, or the order quantity was not right or something. And I never really became aware of the cost of these trading errors until I did this review. So we'll just move on. The end result was 138 total errors that cost 73.4 R. And the trader errors are trader errors that's not following the rules, front running, something like that. And then the rest of them are, platform errors, order entry errors, whatever. The one interesting thing too is there's no way at this point that I can account for. I could do it, but it would probably take 50 hours to go back and look at every symbol for that time period. But this doesn't account for all the hundreds of R available in the trades that I elected not to take when I started trading a symbol and I had a win and then a loss, or 2 wins or 2 losses, and then I just didn't trade it anymore. and the next move was the trade that I was looking for. So that's part of my work in progress. You'll see at the end. This is a chart that Luke was kind enough to send me and go over. Cumulative results for the whole thing was about 75R. Trade sequence plot was pretty good. I think I had 9 trades that were greater than 1R, and those were usually slippage events of 1.18 or something. The largest loss was 1.33. That was on a swing trade. The aha moment for me out of this chart is the fact that I thought my big winners contributed more to my success. And I predicted that and I was wrong. That's kind of speaks to this lesson today. I was wrong. Ken was right again. My focus needs to be between -1 and +2R because 93% of all my trades fall in there. So I need to use ruthless risk management and cut down these losing trades and shift everything to the right. And this, especially this big column of like 0 to -5 and -5 to 1R, a lot of that was those kata challenge weeks where I was just taking the SSC pattern, taking my 1R loss or my half-R loss, and then moving on because we weren't stopping and reversing that whole week. We were just doing SSCs.
Hey, while I got you on that chart, what is the what's that total R capture on upper right?
75.
That's the net of trading is 75?
Yeah, that's every trade I've taken. That's
Yeah,
the
and so
cumulative 600.
Yeah, and so the cost of errors was what, 75?
Right.
So the point is, hey, what if you could I could double my performance. Okay, what if you could only get half? Okay, what if you could only get half of a half? Now you're talking about adding 20R with a reasonable improvement on error reduction. You could get a 25% improvement, which is about 20 more R, which is about almost a 30% improvement on net performance simply by reducing the error rate by a quarter.
Right.
You could get a 30% improvement. So you don't have to fix every error, but you got to go after the errors that are contributing the most so that the one improvement fixes the most
Right.
and adds to the bottom line. So typically guys will think, hey, I want to add 10R to my performance. How do I tweak my rules to get one more 10R trade? Or I could take, you could reduce the errors on 15% of your trades, and that produces a 10R.
Right.
That's the idea of shifting the mountain to the right. That if you improved 600 trades by 0.25R, that's 150R.
Right.
I think.
Yeah, I believe that now that I've lived it. I've heard you say that before, but I believe it now that I've lived it. And Luke ran the data, so it's not me coming up with results.
It really does matter that attention to detail each day in every way, looking to eliminate waste, what Japanese word is muda, M-U-D-A. Continuous improvement is going after trying to eliminate waste and error in every process that you're making, knowing that it's contributing its own little part. That mindset is what prevents you from ever taking a loss greater than 1R for sure. But what it does is it nudges everything to the right. Okay, back to you.
Yeah, 100%. I agree. This is another one of Luke's cool charts. So it's the rolling average of the last 100 trades, 50 trades, and 30 trades. So the last 100 trades, you can see the blue line is pretty flat. It's about 0.15. Not great, but positive expectancy. The last 50 trades, negative expectancy. And remember, I took 47 trades in that 1 week period of very poor performance. And then the last 30 trades, actually the last 30 and 50 kind of have the same shape. But my data says that stop doing whatever you're doing. So we're just making sawdust there. And the funny thing is I was working hard to try to get to 10R, and I had more than 10R of mistakes. So if I hadn't made the mistakes, I would have got to 10R.
About let me add something here mentally. If you think about driving down the road with your hands on the wheel, and then you grip it hard, and then flinch, I don't care which direction it goes, it's going to be a 10R, and then the overcorrection. So this is why the idea that Slingerland talks about in trying hard not to try, the idea of wu wei, of effortless action, is the central feature of the 4 Chinese masters, which is really how to relax a little more and do a little better by trusting the feel. I submit that you only get that by going through the work and many, many iterations on the journey, which is why I said you got to get on with it and you got to own it. And that's why foundational shifts can feel so unsettling when you're making that long journey, because you keep taking the steps and it just starts compounding. And then you periodically, you got to rest, change your socks, dry your feet, adjust your straps, figure out how to pack the load a little bit better. When you're road marching, one little change that you make in the way you lace your boots or wear your socks or shift the load in your pack makes the next 10 miles of road an awful lot different, but it's the continuous effort that keeps going. So trying hard not to try and relaxing a little more. What I'm encouraged by on this chart, by the way, is the slope of the blue and the black line, which is showing a persistent and consistent growth in spite of the more recent oscillations, which get our attention. That says foundations are sound and improving. So back to you.
Right. Yeah. Thanks for that. Yeah, that's what Luke said. He said he's analyzed and looked at many systems, and of course he's a very experienced trader, as you all know. But he said, look, if the blue line, the coin flip line is above 1.5, that's good. But you have to be careful when the shorter term lines, the green and the red line, cross the blue line below, because your more recent performance is dragging down your overall system performance. So this is the idea of the coin flip. And again, the data says, you know, you were doing pretty good, but whatever you've been doing, you need to look at that. So this is my new trade log. It's a work in progress, and this will be a good, I can get an answer from Ken here. So this was all the trades I took this week, 15 trades. And we'll talk about them in a minute, but my new trade log is tracking most of what I need to track, but I also realized this week I had to make a decision on 2 open trades that were positive when I got called out to go fly, because I have a rule that I cannot be thinking about trades while I'm in the air. So I either have to just leave them alone with the stops in place, or close them or something. So on these 2 trades, I elected to sell half and raise my stop. So I did that on 2 trades. I split them in half. So I took profits on the first half that in that moment, just because I had to leave. That's another exit of mine, the got to go exit. Like I have to make a decision now, just do it. And the question is how to calculate the R when you split the position. So you can see that I'm working on this. There's 2 columns here, and this is called the R weight. So the question is how to calculate the R of a split position, how to dollar weight the R of a split position, how to efficiently track all exits as one trade. Because actually this chart, if you look at a trade by trade basis, and I certainly want to give myself credit as a learner of managing these trades, because I did manage half of each one of these positions overnight and then exited the next day. But it shows an R capture for these trades of 7.81, but the return on capital or the return on risk was actually 3R. And it's really 13 trades, but 2 of them got split in half. So that's my question.
Yeah. Yeah, let me
Go
answer
on.
that. I'll answer that real quick. So when they splits like that, add another column so that you can put like A and B. 13A or 13B is the admin number. The
Right.
numerical number of the treat them as separate trades. You just didn't know it at the time that they were moving along together, and that
Right.
way it allows you to compare the decision to sell or the decision to hold, and then you can start assessing the results of that decision. But it
Right.
also, I wouldn't worry about the dollar weight of the R, because that actually is confusing it more, because the R capture of a trade is the same whether it was 1 share or 100 shares. What you're caring about is the amount of R capture versus R risk, independent of size. And so if you just capture, R allows you to normalize that for the theoretical or conceptual risk. And then later it's a decision of how much load in real dollars to put on it. You make that decision as a function of its performance in R. And then it's a separate decision to scale the size of the position based on the confidence from the data. So I would just put it on there, so a little column, so you could say, hey, this was a split, and flag it. And I would call it A and B.
Okay.
Like trade 16A, 16B. And that way later when you filter by that, they'll all come back together, and then you can do a quick comparison of decisions. So
I got you. So we'll track the trader statistics separate from the position sizing. Don't muddy all that up.
Yeah.
That way we can compare trade 16A to 16B.
Yeah, and then I would just trade them. I would treat it as it really was 2 trades, because you're not going back and recreate. No, it was a trade you actually took.
Right.
And what made it a different trade was the exit.
Right.
So that's 2 separate trades, and one captured a certain amount of R, the other one captured a certain amount of R, and both of those are professional decisions you made. So we want to document that as a separate trade, so we know in the future, right?
Right. Yeah, that's great, because the Uwe exit's going to require that analysis. So.
Exactly, because you're split. If you do the Uwe exit strategy, you're right from the get-go, you're saying I've got 2 pieces on here already.
Right.
So it's really a double trade.
Yeah, and that wasn't my plan going into the trade. I just was forced into that decision. But yeah. Okay, thanks for that.
Yep.
Yeah, it's a work in progress, but you can kind of see the tabs down here. I had so many different documents. This assessment was really time consuming and really difficult. So the idea now is to have everything in one place, to take all of this quarterly work that I just did and break it down into daily tasks and weekly tasks and monthly tasks, so that it's almost all complete, or at least the data is captured and collated and organized. At the end of the quarter, there's really not much to do. So that's my work in progress as well. This was my entire focus for the week. Thanks very much for Griffin Cooper for the idea of this and how to track it and the chart. This comes from Griffin out of the Able Way Systems Development course. And I just thought it was ridiculous that I gave away 75R, and I'm trying to determine a simple way to, we already talked about that. So this was my entire focus. So Monday, the question was, can you trade one symbol without an error? And it was a low volume day. I just traded SPY, and the answer was yes. I took one trade. That's all that I saw that day. It was actually a work day for me, so I didn't get to sit and watch the market all day, but I took one trade and I got to no lose plus dinner for 2. Tuesday, the market was closed. Wednesday, the question was, can you trade one symbol all day without making a mistake? Yes. I just randomly chose Cliff, and it was a terrible day for this exercise because I think almost every trade was a loser. We can see it in a minute, but the idea was, can I trade these standard patterns without an error and without judging the pattern? So there's a lot of trades in the past that I haven't taken that were big winning trades. So the answer to that was yes. I took 5 trades on Cliff in one day. I didn't trade anything else, and I didn't make any errors, although I didn't make any R either. And then Wednesday came around. The question was, can you trade 2 symbols simultaneously without an error? And the answer was yes. And no, let's see, Monday, Tuesday, Wednesday, Thursday. That was Thursday, 2 symbols, Friday, 2 symbols. So I didn't have any mistakes this week. And that was my sole focus, was on the process, which is what Ken talks about, and mindfully turning the crank at a slow enough rate that I'm not making errors. So I'm tracking my errors on a daily and weekly basis now, which will make me much more aware of what's actually happening. These are my trades from this past week, the 15 trades. It's just an experiment. I told you what my intentions were, and the results are better than I was able to produce when I was trying to make money or make R. Interestingly, the losing trades mostly came first. So at one point I was down 2.7 R. Seems like a walk in the park when you were down 4 R last week, but I was just mindfully turning the crank, and as fate would have it, these were the results. But again, my focus was on no errors, and this was just really easy. So I missed all the big winners because I have work requirements as well. You know, I exited many of these trades at no lose plus dinner for 2 or in half an hour. And then Friday was just straight up all day, but I wasn't able to trade that. But I still produced 8R for the week, or depending on how we count those 2 split trades. So without even trying, in a kind of Uwe mindset. And my model for my mindset this week was go back to the beginning when you were just doing the best you could to see if it would work. And that turns out to be probably my 0 state, which is because I'm always kind of aggressive by nature. So that curious mindset is much better for me than a determined mindset of we're going to just work harder to make this work. So my work in progress.
Yeah, let me jump in. My dad was a Gandy dancer as a younger man, which is the guys who swing the hammer to drive the stakes on the railroad, the
Right.
9-pound hammer. And he, at age 65, could swing a hammer all day, while the boy, or an axe or a maul to cut wood. And we would go cut wood, the boys and him, and the younger boys would be out swinging it as hard as we could and fast. My dad would just keep cutting wood and
Right.
never tired. And at the end of it, his pile was bigger than ours. And I just learned from that, you know, that the 9-pound hammer is a great song by Tony Rice if you need some motivation there. Back to you.
Yeah, and I wouldn't call it, there was no stress this week, but I wouldn't, you know, I don't know if there's any such thing as 0 stress, but it was almost effortless compared to last week. Different focus, different mindset. Ken said, just turn the crank. All these things I showed you are still works in progress. Finishing what I've got started is I'm going to continue to trade just like I have been. I'm also going to try to finish what I have going on. I think 2 weeks from now, I may be able to give you guys a really good briefing on all the things that have come out of this, and some trade examples and some performance examples. But I think it's going to take me a little while longer. I really want to complete my data collection spreadsheet. It's probably 90%. I have to address that split trade issue. And then my very next thing is to create a way to track the T+2 time and trade to see what I'm leaving on the table after I exit. Because I'm already able to see the adverse excursion while I'm in the trade, but I want to look at it after I exit, what's left there. So
hey, one of the reasons that effortless action feels effortless is because there's no net cost in the continuous effort. That the energy you expend is the energy the universe gives back to you in full measure. And so your net is 0. So you are able to sustain that rate. When you go to the adrenaline, or you're trying extra hard, you're actually spending more energy than the universe is giving rewards for. And so you go into a deficit. So now you got to have a rest of 3-to-1 to replace the energy that you got from a short burst of adrenaline. So it turns out that gripping things harder than you need to takes more energy. And so there's a certain amount of that of, I need to have a light hand on the wheel or the reins, but being able to instantly respond with just an extra bit so it doesn't get yanked out of my hands by a sudden jerk. So that means you've got mindful awareness about oncoming changes. You let the wagon and the horses go, they'll find the right path, and they're going to get startled before you. So pay attention to the horses and not to yourself, or look at the places beyond where the horses see. They will see and smell the danger that's immediate much sooner. So if you're mindful to them, you can trust the horses and your hands can be light. And so what you're doing is looking at the trade beyond, the second and third order effects in places where the horses can't see. Their noses are great, their eyesight not so much. So your ability to focus and see farther and read signs allows you to know when to start paying a little more attention and making sure everything is set, not gripping too tight, but being ready for the implied volatility of a certain period. So we got to learn how to trust the inner guides, the inner horses that are doing the work and the lifting. So think of it as an energy account, that when you're going much harder than you have to or should, or you're paying for it with adrenaline, and you got to pay that back. And what you want is get to the sustainable, smooth rate, which can be sustained indefinitely. So that's where we want. That's sort of the water cycle or the adrenaline cycle there. So really good work, just amazing.
Right. And Ken, one of the things that just clicked for me is, why have systems if we're not going to use them? Let the system do the heavy lifting. And that's kind of was my attitude all week. Was I have the system, just let it work for me, and thanks to Phil and Griff and my platform, I can automate the 1 hour trailing stop, and I can set alerts, and there's a whole lot of things I can do during the week to take the pressure off of me, and it worked. Just let the system do the heavy lifting, and all it needs is for me to just turn the crank and oil it every now and again, and that's what happened this week.
Yeah, one of the reasons I like the 3-minute sniper trade of the day, I really enjoy that. It lets me be absolutely disinterested in the 30-minute charts, which is where my production is.
I noticed that in too, strangely enough, probably the biggest return on time was me spending 4 months focused on learning this new system, which made me completely disinterested in the one that matters, that's actually making the money.
Yeah.
I haven't made any errors. I haven't tinkered with it. I haven't worried about it. So that was a huge payoff that's unseen benefits. But I've also gone up. I talked to Luke, and I didn't show any charts today, but you'll see I stepped up one time frame to the 5-minute, and Ken predicted this very accurately because he's lived all this stuff. But after trading the 1 and 3-minute chart, the 5-minute chart seems like a 30-minute chart almost. And I'm able to, I just have, like a 5-day, 5-minute chart. And if the trade works and I get to no lose +2, and I like to go to work and keep it on for the day, I find it very easy to manage, and I can put an automated 1 hour trailing stop on it or something. So that's kind of where I'm at. But I want to plan to use that 1 hour or the 3-minute and the 1-minute chart kind of as a weekly workout, if I have a chance in the future.
Yeah, I look at it as a rehearsal and almost like a baby rattle. I let, here, baby, play with the rattle while I'm taking all your vital signs and doing all the other stuff. So you just say, here, play with this. Maybe not a rattle, maybe just a chew toy so it doesn't irritate. But, but I'm a drummer, so I like listening to babies rattle because I can feel their inner drummer when they're right. It's not noise to me. It's two drummers talking to each other.
Yeah.
So I've always looked at the noises that babies make as information as opposed to irritation. Just a word to the younger fellow with newborn. Be thankful that you hear it.
Right.
Not hearing it is worse. All right, so I think that was I heard an aho. So I'm going to hit the tones and cue up our next. By the way, that's what 1/2 of the annual research project looks like. Is when you complete the other one, that probably constitutes your live or your research weekend contribution, and then we'll get some guys to peer review it, and then you work with them to optimize it. Then you give it an executive summary of what that'll probably be a 2-hour pitch. And then you render that down into about a 10-minute or 15-minute so what of the research. With the other stuff is available to listen to, but you want the executive summary, the one that you brief your wife or the guy who wants to invest capital in your professional process. That's how Matt Richardson got to where he is by taking that approach of continuous refinement. So here we go into the Aho tones. Yeah, I know you don't want to follow that, but you will. Chinlong.
I cannot wait too long, you know. I give you guys a chance anyway. So let's start with my word of last week. If I remember correctly, because I lost my notes from last week. But my word of last week is a patient. I'm not a patient person in any chance, in any way. So that's always mean a lot to me. Just give an example, you know, when I try to learn from Ken stuff, I look at the history of the post. You know, I found somebody being Ken's student 10 years ago, and they are a good professional trader. Now, heard about Jeff's story today. I realized he learned Ken's teaching for 6 years. That made me think about the word patience. You know, I start to learn Ken stuff maybe 14 months ago. I have to be patient with myself compared to those people. I cannot set too high goal for myself to, you know. Anyway, I found an excuse for me not doing professional work compared to what presented by Jeff today. Anyway, that's the meaning of the word. Today's lesson, I absolutely like it again. That's what really I needed. The key word for today's lesson is forget fast. I think, you know, my prediction and my bias, you know, impact on my decision how to exit the trade. You know, I say I always exit too early. Maybe I'll have to investigate that in a professional way. I didn't get a chance to do the 2 exercise. I move on to the trader's exercise. What I decided, okay, I watch that really quick, take my notes, and then watch that again, take notes again, compare that. You know, that's a 1 hour, more than 1 hour recording. I didn't finish my exercise, but what I did, I speed up to 1.75 times the original speed, finish my first round of listening, take notes, and halfway go to the second time. It's interesting to see how much notes I take. I love that. How to finish that later and compare what kind of notes I had. One thing stick out, you know, in the video can talk about a person, a trader, grinding for 18 months and then get it, accelerate the R histogram to really good professional way. Then I think he blew it, get back to the start point, forget the basics that can't work. So that example stick out for me, make me to think about. I cannot guarantee I don't blow off what I did, but I'll keep that in mind. That's today's lesson. Is really love it. Talk about my trade last week. I have to get my notes first. So what happened is try to improve application of the triple screen setup. I also get the stock chart do the work for me, get what is in that setup. I still struggle with lower time frame, 5 minutes, and the time frame 30 minutes I try to trade. The good thing is I never look back to 1 minute or 3 minutes. I took a certified trade last week, made 2 hours to cover my commissions. I made my first 3-hour win for my live trading. That's a big psychological winner for me. Just confirm to myself I can make some big winner. Anyway, 3 hours is not really big, but for me it's big. Also, the positive side is no losses larger than 1 hour. Even I leave 3 trade over the overnight just to figure out what happens. I was lucky. None of them are larger than 1 hour, but all 3 give me 1 hour loss because I just leave my my stop there, see what happened. Also revised my interactive broker chart setting. Previously, I really liked the dark background. My background is dark. My bars and the indicators is in the opposite way. So when I saw everybody else, almost everybody else use the light background, dark bars. So I said, okay, I see all those, how that impact my psychology, how that impact on how I trading. So I switched to light background, dark bar. Actually, that worked better. It's not better, but didn't make my trading worse. I think I will keep that. It's really difficult to see somebody else. I admire you the light background, and I use the dark background. Just try that, and I think it'll work okay for me. What didn't work? I use the red dot, green dot approach for 3 weeks now. What I realized, the first week worked out better. The second week worse. The third week, which is last week, give me more red dot. I give myself chance to improve on that. So I don't have a really good plan for next week. After listening to Jeff's stuff, I will revise my plan for next week and get it going. Only have about 200 trade compared to 600 or 1000. Give me another a reason to be patient with myself, keep treating, get the result in a professional way, record it, analyze that. It really tempted to me, should I attend the research weekend or not? I haven't decided I really want to. If I don't present, I will pay for that. That's my decision on that.
Yeah, I think we're gonna do the research weekend virtual. I think this year one more time, just so we get all the travel nonsense out of the way. Next year, I am probably ready to start thinking about doing them in person again, so we can show you Kansas City and eat some proper barbecue. But I think this year, just given the time, it's best to do it virtual one more time. So. Great stuff here. Let me hit the tones. If you end up using the light background, these are that blue light filtering glasses, just to protect your eyes. I would do that. Ken.
Hey everyone. So I'll start with my word from the last time I came, which was 2 weeks ago, because that's my cadence. So it was embrace, as in embrace conflict, which was the that lesson that day. Actually, it's been very useful for me. I think immediately after that, I had some conflict in like personal relations. And in the past, I would probably have looked at it and say, "Oh, this is just a nuisance. I just want to avoid it. We should go away and get annoyed or whatever, or at least a bit, get some negative emotions." But it's really useful to have this idea of to embrace the conflict. So that's been really helpful, and then it's been helpful quite a few times. So I think all credit to the creativity course. I like to just give it credit. Otherwise, I wouldn't really have thought about this or even this concept. So that's really great. Then moving on to this week's lesson, predictor. I was actually the same. I had the same thought as Jeff did, which is that I don't really predict. And then I looked at the lesson, which was about going through the exercise and about going through the book and the paragraph and all that. I still didn't think I did prediction. Part of the reason was is that I may have some negativity associated with the word, because I remember I did a Venn top exercise somewhere, and it was about to test out how well we predicted future actions, and the conclusion, well, the not the conclusion, what it was trying to draw out, the lesson was that we don't really predict very well at all. So I've always kind of stayed away from trying to play the prediction game, especially in trading, because I used to do that, and it didn't work out very well. So it kind of makes me somewhat uncomfortable when we talk about trying to predict, because I didn't think we wanted to do that. However, I think if we look at it as anticipating, maybe if we just change this, it's a matter of semantics. Maybe that's different. And I was kind of thinking, well, in any one scenario, when we are in a trade, I think there's always three future scenarios that we can anticipate. It can either keep going in the direction that of the trend that we're in, or it can stall, or it can reverse. I suppose it's being open to those possibility as being just being fixed in saying, okay, I'm long here now, so I expect it to, go to the moon and I get my whale trade. So I think in that sense, I think it would be very, very useful for me just to have that tension of having all the different scenarios open. And also, when I'm reading something, depending on the book, on the type of book, obviously, I don't normally prefer just to be in the flow and not to be above the flow and observing and trying to think what is going to happen. Yeah, I do have odd moments in movies. Sometimes though, when I do try and kind of predict, say how the plot can turn out, and then it'll be more obvious in some movies than others. So yeah, I suppose I do to some degree do that. And I wrote it. I made this note. It seems that I prefer hot cognition, which is I don't know whether system 1 or system 2 thinking. If you've read Thinking Fast and Slow. But this is more like, you just want to go with the flow kind of thing, like your subconscious or unconscious deal with the thing. And my point in always reading something is trying to look for the point in the paragraph. Maybe I'm just goal oriented or trying to look for the point in there. And I'd rather do that than predict what it's gonna, what the author is trying, where he would want to take you, or he or she would want to take you. So that's like a reflection on the lesson. And then I watched the video. Actually, I only got halfway through the video, but it's very profound, and it was I had an aha moment, which was I think he said by the time I get to the average win, I should move my stop to dollars plus dinner for 2, which was it's interesting because I had an exit rule to say if I get to 0.5R, I will move my stop to kind of just above break even. And then I realized that my average win so far is like 0.6R. So that's just above 0.5. And I think that the important thing is that, having rules like these are really helpful because, I think I've said this before. I used to think I don't want to have so many rules, because I might get confused. But since I've started writing down all my exit rules, it's actually helped me not to have to, think too much. Once I get to that rule, I know what to do. So it becomes standard work really. So that was a big aha thing about the average win really. And then I think the video you went on to talk about different exit rules for different contexts, different types. 3R, if you get to 3R, you don't want it to move back to less than 2R and all that. So that's very useful for me. Then there's a question that will say, how will you explore your entry and exit strategies? I don't think I'm actually in the place yet. I'm just going through the reps. I understand what it means. I understand because I did that. The Vantap, the systems course, and we actually, the group that I was in actually looked at, how to, as you say in the video, how to isolate, either your entries so that you can evaluate your exits, or how to standardize your exits so that you can evaluate your entries. And I always remember that, I think in that course, they said that they demonstrate, well, not demonstrate, they provided evidence that it's your exit that counts. And they gave an example that here's a random entry data set, and it was positive expectancy, and you made money because of your exits. So I mean, if we really take that put in place, we can just make random entries and make sure that our exits we have our exits and we know what they are. I'm not saying they're good, bad, but at least have the exits. You can even use Wu-Wei exits, and presumably that would be profitable. So anyway, just a thought there. I think, and then going on, I just agree with what the last few sentences of the lesson was. It says, so the mere ability to adopt a standoffish, disinterested mindset in trade management will always be a massive edge. And it's about emotional state management, and I totally agree with that. You know, like Chen Long, I've just realized that like Jeff was saying that he's been following Ken's systems for like 6 years. And I like Chen Long. We just started really with the last creativity tool too. Chen Long was ahead of me even, and so I'm even spent less time on it. And I've been trading really 9 months, So I need to be realistic, I suppose, because I was getting serious imposter syndrome from these guys, Jeff and Damien and all and Satya and all these guys. And then I realized I've actually been doing this for a long time and trading for a long time, longer than I have been trading. So just need to be a bit more realistic with that, I suppose. And I think I'm quite happy looking back. This week, this last 2 weeks, I've shared with the guys in the accountability group. I've been reading this book, Trading in the Zone by Mark Douglas, and that really has been eye-opening and made a huge difference. It's all about beliefs and basically emotional state management. And I shared with them yesterday that this week I've been trading with low to no anxiety. I'm not saying that I have the results to like the mind-blowing results, but I think that is a huge breakthrough for me. And also, it relates to, I think, Ken two weeks ago, one of the Damien asked a question, and you had there was a long explanation. And I think in there, someone pointed out, and I think you said that you don't need more confidence, you need less anxiety. So I think that, reducing anxiety is definitely a big win for me. Yeah, I won't get into the Mark Douglas stuff too much, but that's all I have for this week. I hope.
Ernie, bring us home.
And on that discordant note, I want to tell you about my trade for last week. It was one of my trade of the week was in AA, and it was a 30-minute swing trade that went up, and I had a small profit. I had the chance to take a small profit. I did not. As you know, we have our fireman, the manager, and the sniper. But I have a monkey that is a little bit of a troublemaker and a gambler. So as that stock went down, I did not get out. And that was Thursday that things went bad. But Thursday before the market closed, you could see that it was coming back up, and there was a beginning of a spring crossing. And on Friday morning, as the market started, it was still a supported spring crossing. So I doubled down and took another position, and it turned out all right. It came up, and I was able to get out. And so my monkey is telling me this all worked out just fine, no problem. And wasn't it fun? And it was fun because it turned out okay. It wouldn't have been fun if it had gone the other direction. So anyway, I realized as I was evaluating things, and I went over this because this was an exception. My other trades, I was really following the rules, and I really handled them well, or handled them properly, I should say, except for that one. And I played with it, and it was fun. But I realized the only reason that it turned out okay was because I finally started following the rules, started taking it seriously. I had my 30-cent minimum manageable risk box, and on that second trade, I was going to get out if it went down 30 cents. And I was going to also get out whenever the ascent ended, as you might say. So I only survived that because I finally came to my senses and started following the rules. So it was a good experience, and it really just made me realize how important those rules are, and in following that. And in this lesson, as you know, we're in section 4, and it's practice, practice, practice. And it's presenting lessons about the twister, predictor, tweaker, the impersonator, blender, and the gamer. So we're building characters in our brains so that we can adapt creatively to the situations that we find ourselves in. So we are trying to develop the ability to exit ourselves and examine our actions with an outside eye. So that's what I did with my trade. Did try to do it with the outside eye, and it was a good experience. I think that investing is done as an individual, and we read about how lonely it is to be an investor, and how we have to motivate ourselves, and that we're not part of a team. And so, in a sense, we're developing a team in our brain. With the twister, the predictor, and the impersonator. But the creativity course has made me realize that the tortoise community is a team. And it's a team with a great coach. And I really appreciate the dedication that Ken brings to this process, that he's not only learned about investing, but he spent so much time and effort in learning how to share that investing knowledge through teaching. And he not only wants us to invest wisely, this is my perspective, but he wants us to be able to learn and be educated and to teach others. He wants us to share that as he's been doing. And he wants to know how do we learn, and then how can he teach better? And now Bill, his brother, is becoming part of the process as well, like as an assistant coach. So my thanks to both of them. But I know that he doesn't want to hear that, and he's not being the coach part of this is not my focus. The second exercise of the lesson is about focusing on a player in a sporting event and getting into the flow of their actions and predicting what they'll do next. So it made me think about how important that a teammate is, and what makes that teammate so important. And if the event is football, then it's their knowledge of football, how well they know the game book, what condition they're in as an athlete, what their training is, and their experience in the game. Last month, there was a magazine article in the Athletic. I think it's a magazine that the New York Times produces. I read this article, and I also watched a TV show on HBO, Real Sports. So both of them involved, I guess what I read into that and watched into was the value of a teammate. And to me, that's character. The Atlantic had a story about a little boy named Logan Hale. He became a big football fan when he was like 7 years old. And he loved this one player, Christian McCaffrey. McCaffrey plays for the 49ers. Logan followed him as a player when he played for Stanford. And then he was drafted by Carolina. And then eventually he wound up being part of the 49ers. Logan idolized McCaffrey. And unfortunately, Logan was diagnosed with cancer when he was 11 years old. The disease progressed, and eventually Logan went into cardiac arrest and fell into a coma. And McCaffrey found out about it through his marketing agents, and he heard about a young fan of his who was suffering from cancer. So McCaffrey promptly recorded a video and he sent it to Logan. It's really hard for me to tell you about what happens next. I was telling my wife about it, and I couldn't do it without breaking up, because McCaffrey's words in the video were the last words that Logan still do it, were the last words that Logan heard. And Logan was eventually, whenever he passed away, he was buried in a McCaffrey jersey. So to me, you know, that individual, that athlete, I thought he was amazing to do that. And to, in the article, it goes on about how Logan wanted to have gaming consoles for people, for the young kids in the cancer ward where he was. And he was trying to find a way to raise funds to provide those video controllers and you know, for the kids that were in the hospital. So McCaffrey took up that cause and set up a foundation or a program for to do what Logan was trying to do. And so the man was a real hero. It was really good. And I can imagine that the value that he adds to the 49ers. The Real Sports Story on HBO was the opposite end of the spectrum. They talked about Matt Araiza, you know, punter for the Buffalo Bills. Matt Araiza broke records, punting records in college, and he was at the beginning of a promising career, but he was abruptly cut when he was accused of rape. He describes what happened from his perspective on the TV show, and he's not going to be prosecuted, but he's having trouble getting back into the NFL. And you really probably have to watch that for yourself. I certainly had a reaction from what happened, and it's really a shame. But to me, it just showcases the importance of character in a teammate. Because athletes represent not only themselves, but they represent their team, their fellow players. They represent the city they play in. They represent the sport itself. And I really value good teammates. For me, my teammates are my inspiration, my support, and my motivation. When I succeed, they keep me humble. And when I fall, to me, my teammates help pick me up. And I value talent and experience and ability, but bad character, to me, is like a cancer that eats at and it destroys the things that make us great. So to me, what I have found in the tortoise community are a group of people, my teammates, in a sense, that are eager to learn, people who put in the work, people who share ideas, people that make me proud to be in their company. And to me, they provide meaning to what I'm doing. And so it's really, the teammates are really a big part of all of this. And I just think it's so important. And so being part of the creativity, you know, today listening to Jeff, to Chun Long and Kyun talking about what they're going through, and they have shared all of this. We have our accountability group. I get so much out of that. It's very important to me. The value that I get from Ken and the teachings, it's amazing. But also sharing that experience, and then sharing the experience in this creativity course and in the tortoise community. To me, that has been so invaluable and so important, and it really is just provided meaning for what I'm doing. And so I thank Ken, I thank Bill, and I thank all of you. You guys are really, you know, the effort that you're putting into it and trying. and sharing your stories. So important and so valuable. So thanks for being a teammate. Aho.
Well, I got us at about hour and a half. That feels about right. And I'm going to hit the tones and ask you to think of the word that comes to mind to focus our effort for the week ahead. That's for everybody. And I'll call on you in the order that I see you on my screen, and just give me your word. Ernie.
Character.
Greg.
Action.
Kyun.
Zone.
Shunlong.
Wedge, again, reuse.
Hamad.
Consistency.
Mullen.
Trade records and details.
Jeff.
Doji.
Mine is resilience, and I hear my wife calling, and I am being resiliently called upstairs. Hey, good work, guys. We shall see you on down the road. Just unbelievable work today. What a milestone. Well done. And praying for my brother's safe trip. He's in Chicago, turning south. Looking forward to seeing him. Take good care, and see you soon.
Thanks, everyone. Thanks, Ken. Cheers.